Well, if you're getting tired of paying more than $4 a gallon for gas, you'll be happy to learn the Federal Reserve is working on a fix. For the first time in more than 3 years, the Fed is set to raise interest rates. It's a move that's meant to help curb inflation. NBC News Now anchor Allison Morris covers business and economy issues for us. She's joining us now with a closer look at what might be coming from the Fed. Hey, Allison.
Aaron, can you believe it? It's finally here. The Fed meeting we have been talking about for so darn long. So we just wanted to make sure, well, the Fed meets today before its rate hike tomorrow, that you understand what the Fed is and what it does. Take a look.
Now to those staggering new inflation numbers.
Interest rates.
The Federal Reserve.
Gas prices.
The Fed is probably going to raise interest rates with the goal of tackling inflation. Do you think it's going to work?
Inflation is at a 40-year high.
It's beef prices, it's produce, it's avocados.
Gas prices are the most expensive they've ever been.
I don't even want to know right now. I don't even look. I just swiped the card.
The pandemic isn't over yet, and a war is raging in Ukraine.
It seems that nothing is now off limits.
The Federal Reserve dealing with a lot right now, but it's meeting today and tomorrow to try and get some of those things under control. But first, let's talk about what the Federal Reserve is and why a dozen of its members are meeting today. The Federal Reserve, or the Fed, is the United States central bank. It's been around for over 100 years, and think of it like a lasagna with a bunch of layers. There's the Board of Governors, 12 regional Federal Reserve banks, and the Federal Open Market Committee, which meets 8 times a year, including today. The FOMC is expected to raise its Fed funds rate, what we typically call interest rates, a quarter point tomorrow, its first hike in 3 years. Now, that doesn't sound great, but if you're tired of paying so much for everything from gas to groceries, it can help. So what happens when interest rates start going up? Inflation starts coming down, stock prices can come down too, and the cost to borrow money starts to go up. Think mortgages, car loans, student loans, credit cards, all more expensive. Let's look at mortgages, since so many people are buying homes these days. If you have a fixed rate mortgage, nothing changes. If you have an adjustable rate mortgage or an ARM, expect that rate to go up at its next reset. And if you're looking to get a mortgage, those rates should tick higher too. Now, you might have noticed over the last 2 years with interest rates near zero that your savings account basically gets pennies on all your hard-earned dollars. Expect that to improve. Certificates of deposit or CDs will pay better interest too. So how does a Fed rate hike then help with inflation? It encourages people to save money by making borrowing more expensive. We spend less, things cost a little less. Supply and demand. So what happens tomorrow? Well, the Fed will wrap up its meeting and announce its rate decision at 2 p.m. in a statement that explains the decision and gives an outlook on the economy. At 2:30, Fed Chair Jerome Powell will give a press conference.
Inflation is too high, but we're going to get it back under control.
He goes by Jay, and he's had that job since February of 2018, appointed by President Trump. Chair Powell will read that policy statement and take some questions from reporters, and our 2 years of zero interest rates will be over.
So, Allison, you walked us through this. We understand inflation is at this 40-year high. We've been reporting that. What is it that makes this quarter point increase the right increment to raise rates tomorrow?
You know, Aaron, some people might argue that it isn't, but there's one word that the Fed is taking into account here, and that is Ukraine. You've heard the expression fog of war. There is so much uncertainty about what is going on in Ukraine with our global economy that the Fed doesn't want to do anything too dramatic tomorrow that could send our economy into a tailspin and perhaps even encourage a recession. So it looks like they're going to go with a quarter point. If you don't believe me, just look at the CME group. Forgive me. They have something called the Fed Watch tool. It basically tells you what the likelihood is of the Fed increase. And they are saying right now that there is a 98% chance that the Fed will hike rates a quarter point tomorrow. There it is. So everyone pretty much thinking that's what's going to happen tomorrow. The Fed doesn't like surprises, so we're not expecting any changes or for them to deviate too much from that.
All right. Allison Morris, thank you.
Thanks, Aaron.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.